of Max India. Joining with us, Rajit Mehta, MD at Max India. A very good morning, Mr. Mehta. Thank you so much for waiting by. And let's talk about your Q3 numbers, right? Because seems like you've incurred a loss of around 18 crores this time as well. So just let's start by talking about one in terms of overall. We'll start first with understanding the expansion strategy. What is the plan in terms of your new geographies over there? Where do you see that moving first?
Good morning, and thank you for having me on the show. The senior care sector continues to be a rapidly evolving sector. It's a growth sector for the next 10 years, given the fast changing demographics of India and the rising and evolving needs of seniors. So we have had a great quarter actually. The temporary dip that you see in revenues and EBITDA is purely because we have no more inventory to sell. All our units in Dehradun and Noida have been sold out. Dehradun has over 190 residents now. It's cash and PBT surplus 125 crores with very high resident satisfaction scores. We are on track on pre-launch activities for our Gurugram, our Bangalore and Hyderabad projects as well on that side. On Antara assisted care services, we have grown by 45% quarter on quarter on the back of a rise in occupancy and growth in care at home as well as medical equipment. So it's a great sector right now. As I said, we have already in NCR, we are in Chennai and Bangalore, and on track to launch in Hyderabad as well. So that's our plan. We also launched our new platform called AGZ, where the objective is to empower seniors to manage their chronic conditions and age with ease and joy, as the word suggests. And within 3 months of launch, that platform has clocked a revenue of about 1 crore and a repeat customer of 1,200 customers already. So it's been a great quarter for us actually.
It's been a great quarter for you, but as you talked about, you're sold out in many of the regions as well. So in terms of the capacities coming on board, could you talk to us about what's the way forward for the next 12 to 18 months? Where are you adding capacity? What are the number of beds? What kind of contributions you expect?
Sure. So on the resident side, as I said, the Gurugram project definitive agreements already signed. The marketing strategy and massing is underway. That's about 0.7 million square feet, about 292 apartments. Bangalore, again, definitive agreements, underway now. That's a large development, 1 million square feet, about 500 odd apartments. And Hyderabad will be our largest development. That also, the diligence is underway. That's about 1.3 million square feet in 2 phases, about 800 apartments. That's on the residential side. On the beds, as I said, about 320 in NCR and Bangalore under fit-outs, various stages will be launched in the next 3 to 4 months, in addition to the 68 that we have already. And about 180 already identified in Chennai and Hyderabad, currently under negotiation. So that's the plan for expansion. And we're also exploring, by the way, for residential opportunities in Goa, Chandigarh, and Pune. Let's see what we're able to come up with.
Would love to hear about those plans as and when they materialize, but wanted to get a sense from you. I'm looking at the numbers, and on the operational front and the bottom line, there still continues to be losses, right? As far as the profitability is concerned, what are the efforts that you're making with respect to either the cost rationalization or improving realization to the fact that there could be a break even at the EBITDA as well as the bottom line?
I think what you see there is a temporary phenomenon, as I said. Had we had more inventory to sell, you would have seen a growth, on revenue and EBITDA. And also we are putting in capital for growth, growing in other cities, other vertical. That's why you see a little negative on that side. It's purely growth capital. But in a few quarters from now, at least on residences, you will find the revenues coming up because of the new inventories that we'll have to sell.
Right, sir. And, just lastly, want to understand in terms of overall, the occupancy in care homes has gone up by 27%. How are you planning to further optimize the occupancy rate here as well? And overall, in terms of FY25, what is the outlook for this business?
Yeah. So on the care home side, we are making several attempts, both through digital and tie-ups with hospital and doctors to push the occupancy. As more beds come up in Bangalore, this will get pushed up, as well. I think digital has a big role to play in terms of long stay patients. So that's what we are focusing on at this point of time. So in the next few quarters, you will find, the care homes vertical, doing much better as we launch more capacity and as the occupancy ramps up.
Okay, thank you so much, sir, for joining in with us this morning on ET Now, giving us an understanding in terms of the outlook of the company going forward as well, and surely in terms of the growth of the company as well. So that was the management of Max India joining in with us.